Can we start with payrolls and skip the Fed just for a moment?
Sure.
250, meet an estimate. Are you looking for a punchy number as well?
We are looking for a punchy number. We're looking for 270, but we're looking for a softer average hourly earnings number, which is arguably more important in this environment.
Supply side story.
Supply side story.
How much immigration are we getting?
We're getting a lot. I mean, if you look at the CBO's numbers versus where they were a year ago, it's about 1.5 to 2 million more people per year than they previously expected. And this is why we're talking about 250 type numbers, and we're not that scared of it.
Which is such an interesting combination with the fact that we're looking for higher inflation in that people are spending money, but our wages going up so much because we've got this influx of people. And I think that that's where it's a tough thing from an economic standpoint, because the wages can't move up as fast if I have plenty of labor supply. So people are getting hired, but are they getting hired at high enough wages to deal with the fact that goods have essentially, and food and things have shifted up in terms of pricing? Those levels aren't come down, even if inflation is slowish.
So, I mean, I think when you look at from the start of the pandemic, you look at prices of most goods, core inflation, they're up kind of in line with where wages are so far. So consumers can generally afford what they're paying. They just don't feel great about it, which is why consumer spending has held up fairly well. If that wasn't the case, then you would have seen a demand destruction type of environment, but that hasn't been the case. We've seen a resilient consumer because they've been frankly able to afford it on average. It's just they don't feel great about it. Now, looking ahead, we should see core inflation, and now we're seeing core inflation running at something like 3%. It's not as if it was anything like what we saw. And the consumer's still in pretty good shape. We saw that on Friday. That was one of the bigger expectations, with the savings rate falling back down to 3.2%.